Good afternoon and welcome to Biztech's Inside Trading Show. Today we have, as always, my co-host Pang Vi Lung. He's the founder and CIO of Track Record Trading Academy. Vi, welcome to the show.
Hey Ryan, let's talk about trading.
Now, Vi, for a start, we're gonna start as we always do with this show with a quote from Warren Buffett, and I'm going to share that on the screen right now.
Yes. So he says many things. All of them are sage advice, but one of the better ones and is that invest in yourself as much as you can. When asked about investments, what's the best investment? It is yourself because you are the biggest asset that you own by far. And this is one, of course, if you talk about it, then it sounds quite intuitive. But many traders, especially retail traders, don't tend to see it that way. They spend a lot of time researching or reading, or maybe not so much as well, but they tend to neglect the self-improvement part, meaning that you try to spend uh, a certain amount of time always consistently to improve your process, to figure out better ways at looking at the markets. So today, we're going to talk about one of the important ways to be proactive about market rather than be reactive to market.
Okay, and what is that really? And the topic that you're going to talk about today really is around the composition of the Fed.
Yes, correct. So the composition of the Fed is always important, but it becomes significantly more important at times of transition. So what we've been having since the start of the hiking cycle has been pretty much an automatic mode in the Fed. Like almost all the members were consistently hawkish, meaning that they were all favoring interest rate hikes, and they were acting quite automatically by hiking interest rates at every meeting. So it's much more of a how much to hike rather than if they are or not hiking, right? So, but that has started to change, and we are now at a transitory regime of the Federal Reserve voting pattern, right? So currently, if the Federal Reserve voters are 12 voters on the FOMC, they have 8 permanent members and 4 rotating. That means there are 5 non-voters who are alternates, and in the first meeting of every year, they will switch place. They will be incoming new voters. So 4 outgoing voters will leave the board, and 4 uh, alternates will become voters on the board. So what this means that is that the structure of the voting will change. So currently, as we see it, we have permanent members and outgoing members and incoming members. And if I think most people tend to just take it as it is, they read it about these things and they don't stop to think about it, right? They don't stop to think about how the structure of the voting will start to be influenced by different members on the voting board. So, if we, for example, if we track the progress of their uh, comments, like the change of the tone. For example, these are the 3 members of the board that we monitor everyone on the board, but we are just showing an example. On the left side, the left comment, there's two sets of comments. On the left is the record of what they significant comments in the press, in the media, in the speeches that they give prior to the September 20th meeting, and on the right side is after, right? So we can gauge the hawkishness and dovishness of their tone based on their comments. So red would be hawkish, meaning that they favor more interest rate hikes. Green will be dovish, meaning that they favor less, or in fact favoring a pause, right? And the yellow would be pretty much neutral. We are not sure which way they lean, or in fact, they are quite non-committal and quite data dependent. But let's just say we do that, right? We monitor the dots, and the dots to the left is before the previous meeting. The dots to the left, to the right is after the meeting. We can see there is a change of tone, right? Like from in the permanent members, we can see that the vice chair, who was pretty much neutral before, has turned to green and become slightly more dovish. And Christopher Waller, who was hawkish before, a red dot has become a green dot, right? So we can see the tendency is there are more members on the voting board that's becoming more neutral or more to the dovish side. And you can see
And
here,
we, to be honest, this presentation of information is so interesting for me because basically I never thought of this in this way. Because if we know how the board composition for the FOMC is, it will make their decision making more predictable to us. And that's something that I never thought of before.
right? So I think it's kind of not just you, but pretty much majority of the traders in this world, especially on the retail side, right? Because they tend to not even know what how the board works, and they just read about it, and then they read about market expectations. And of course, yes, of course you can subscribe to different experts and just let them do the work, but you still need to figure out who are the experts, right? So but as Warren Buffett say, if you can learn, why not, right? It's good to understand how the tone of the decision making is starting to change, how the structure of the board is changing as well. So this is
Absolutely.
the 2023 board of FOMC voters. So it's on the left side, right? And there's four outgoing and there's four incoming. And now we are coming towards the end of the um, year. So when in 2024, in the first board meeting, the incoming voters will become the voters for the year. So it's important to see how this is going to change. So from this picture alone, of course, in the interest of time, we don't go too much in how we interpret the comments of it's my personal interpretation, can be wrong, but there is a clear shift of even for the board members, there's a clear shift that they are starting to become more dovish, as we know, right? We are seeing their comments, we are
Yes.
reading about their comments. I think everybody knows this, but how many, right? So I think there's three quite prominent members that are starting to change their tone. But more importantly, also, if you see the red dots as hawks, which are more supportive or more interest rate hikes, and the green as less supportive of hikes, you can see it's closely balanced now that we have. If you see vertically down on the right side here, you can see that there are two red dots on the board of members now, board of voters now versus three doves. So that's why I think they're pausing, right? Because they have been on pause. It's kind of they're more neutral and slightly to the dovish side, and inflation has been coming off. So, but what happens next year? If you see 2024, the new members come in, we now still have two hawks if nothing changes. If their tone remains exactly the same, we have two red dots, and we have now four doves, right? So we are looking vertically down on the right side, right? So we are seeing four doves versus two hawks at the start of the year at the first board meeting of the 2024, and this is assuming that inflation, of course, doesn't surge higher and data remains close to their projections going forward.
Now, looking ahead, then, V, uh, what are some of the latest data that's just come out? And give us a flavor of what your thoughts are.
Well, so the most important data point of the week was the U.S. inflation, U.S. CPI. We saw that it held steady, didn't really change. It was expected to the headline inflation was expected to slow down to 3.6%, but it was uh, pretty much unchanged from the previous month's observation. So that's a slight
Mhm.
disappointment. But the core index basically was lower than the August 4.3%. It was 4.1%. That was expected. But of course, again, if you're looking at a data points on a case by case basis, it's kind of hard to figure out what's the trend and what's going on, right? So if you look instead at the chart, we can see that yes, the headline inflation has been coming off since middle of last year, but it's starting to be so creeping higher as well, right? So this could be a risk. But if we are looking at the core CPI, which excludes the more volatile components of energy and food prices, we see that since the peak in of 6.6 last year, middle of last year, it continues to come off. Right, it's coming off quite aggressively, and it's pretty much as expected by the projections we have seen so far, and sometimes it delivers below projected results as well. So if this continues, I believe the doves will start to take more of a prominent role on the voting board. So that means the hurdle to hike interest rates further will become higher and higher as time passes, as long as data conforms to projections going forward.
Again, then, V, on that note, thank you very much for your insights. And thanks again for coming on Inside Trading today.
Yeah. Also, Brian, of course, we rushed through this in the interest of time. As we Track Record Trading Academy, much of this can be sourced from our data as well, or our write-up. So feel free, if any of the audience decide to explore this further, drop us an email or just subscribe to our daily insights. As always, thank you, Brian. Good luck.
Now, that's it for our Inside Trading show. We've been speaking to Pang Vi Lung, founder and CIO of Track Record Trading Academy. And this has been Biztech's Inside Trading show. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.